can stocks go? Katie, why don't you just tell us? Like, is it like 5%? How low can they go?
They can go pretty low. I think right now I just was reading something that we're actually publishing to our articles on Tasty Trade. And I think this morning, Dr. Data wrote a piece in what Nasdaq is down like 20% on the year right now. So, of course, while we have a little bit of a breather today in the indices, it hasn't really been a great year or the first couple of months for any of these equity indices.
Yeah, especially, and I'm glad you brought, first of all, Mike, Dr. Data does great research. I'm glad that I learned a lot of what I do from him. So you wouldn't be surprised to see that our minds are pretty much in the same exact place. He's talking NASDAQ. I'm talking small tech futures, which is about a quarter the size of the micro NASDAQ future. So you can get even smaller on your tech stock trades. And yeah, tech stocks are the worst stocks in 2022. A small technology down over 20%, like you say, similar. NASDAQ and small tech are very, very much aligned in the first few months here. And also down 4 out of 5 days. And I bring up both of these points because I want to look at how low stocks can go from a short-term perspective and a long-term perspective. Because if you're actually asking the question in like a clickbaity way, like, ooh, click on this to find out how low stocks can actually go. The answer, everybody, is zero, right? Like that's the theoretical amount that a market can go here. Now we have a bunch of historical data for small technology. Stocks can go as low as they want, Katie, but what do you use in futures or in options or just maybe in your head as kind of like a benchmark of like, of course, I'm trading this market and it's priced around $50 and the margin is, say for the futures is like $600 or $700. Of course it can go to zero, but how do you in your head wrap your mind around like how low a stock product actually can go? Is there something that you lean up against, be it like, oh, the 10 delta put or the margin on a futures product? Is there like a good back of the envelope math for how you actually start to quantify how low stocks can go?
There's a couple of things that I like to use, and call me, your shameless small exchange plug, but I do open up your newsletter every week when you all send it and take a look at the standard deviations of the various products that are offered. And you guys kind of show them in a bunch of different ways, whether it be like a daily standard deviation range or like you've got your like projection cones for the next 4 or 5 days. So I do use those, but I know that the two of us have also talked about using, like you said, a fraction of the margin on these small exchange products to kind of help you assess highs and lows in the short term and what would then be considered an outlier from that general guideline, from that buying power.
Would you look at that? I didn't even set you up for a plug, but that's just how great a person, like I say, Katie is a trader's trader. She's not only from the public standpoint, everybody loves her, of course, but she's a trader's trader.
Well, I mean, use the tools that are created and delivered to you, like it's like a no-brainer to me.
Yeah, I mean, I gave you a couple of different versions there. Like, of course, margin in the futures world is super efficient, which is great from a cost perspective. I don't have to pay as much to buy or sell, be it stocks or metals or crude oil, whatever. But also, it's just with that efficiency, you're getting a great measure of like, this is what the clearinghouse or whoever is actually saying how much risk is in this position between now and expiration. And so to buy sticks, for instance, the margin is like $600. And so it's like, okay, if I buy this thing, I can pretty much lean up against $600 or $6 in terms of the futures price being the downside in my trading here. Theoretically, stocks can go as low as they want. But yeah, I like that you brought up the newsletter here. If you're not already a member, go join everybody. Community.thesmallexchange.com. We're actually making a lot of advances on not only the sign up process, but the portal displaying a bunch of this data for current users. But you get 50% off your exchange fees for life. And some of this data that we crunch these numbers every single Friday and post them to you on Monday. And you get the daily standard deviations of how low, sticks can go on a daily basis is usually $1. That's one standard deviation, but it can be in outlier mode, $2 to $3. And also we use volatility to give you a projection of on a weekly basis. And you can see those sticks is down on the week here again. It's within this range. And that's always a good basis, is either margin or volatility or options. Whatever it is, those are all like efficient measures that are using actual data to let you know how much something can move.
Yeah, exactly. That's why, again, like it's such an easy thing to just open up your inbox and have it handy. And it's great. I didn't know you guys were working on some updates to your community portal. So just having that nearby, and then being mindful of that, not only when you're looking for ideas, but as you click confirm and send, like Pete, you and I always talk about like having a game plan, like before you even get filled. And that's one way that you can do that and take one less emotion out of the equation.
Very much appreciate the plug there. But let's get into a couple more statistics that you maybe don't get in the newsletter or anywhere. This is something that if you've heard my voice before talk about equities, you've probably heard me talk about this stat, but I wanted to crunch it again for the Sticks product in particular. In the short term, Katie, stocks bounce back, and they have over the last several years here of data that I'm looking at a 60% hit rate after multiple down days. And right now we're kind of in the midst of a second down day in a row, but we saw this actually yesterday. It was 2 or 3 days in a row down going into yesterday, a nice big bounce back. This doesn't seem like a lot, Katie, but for a short-term trader, this is a huge amount of edge, right?
Yeah. I think, if you're staying small and having this like statistic, it helps you get a sense of like, okay, what can I realistically expect to be happening as the week closes or as we go into next week? And which way can I then position myself with that information?
And it's great, like the buy the dippers and everything else. It's a great trade if you buy that dip and then have realistic expectations of, I'm just looking for a 1% bounce in the next 24 hours, and that's worked out several times. But also as a last piece here, in the long term, stocks bounce back by an average of plus 4% in the month after a 10% or greater down move. This is the last several years here. Essentially, when we have movement like we've got to start this year of down 20% in the first couple of months, we've on average bounced back, and not only bounced back by a little bit, but 4% in the month following. So if you have a longer time horizon here, stocks definitely don't tend to trend lower for too long. On average, they'll bounce back in that next month. And this is good for if you're buying the sticks and maybe selling a QQQ call, or you've got a little bit like a 30-day or a 60-day time horizon, a nice statistic to lean up against as well.
Yeah, definitely. And with how easy it is to like roll these smaller futures products now, you can have a long-term assumption without it being like crap expirations tomorrow. Now I can no longer have or maintain a position.
Love it, Katie. Thanks so much for joining me. Always a great time with you on here. Make sure you're checking out Katie on Twitter. She's got a great Twitter following, and she's starting to post, some more trades and everything else. Can't keep up with the Mikey Butlers of the world, but who can,
Too active for me. Yeah. I try, to post here and there when I can, but he can't be topped.
All right. Awesome, Katie. Thanks for helping talking me off the ledge with the US dollar. And we put some statistics for the stocks. This is it, people. When there's the most fear in a market, that's when there's the most opportunity. And man, are Katie and I getting squeezed on a couple of positions. So hopefully there's big opportunity ahead for us in short dollars and long metals and long stocks, whatever it is. Katie, thanks so much for joining us. Everybody, thanks so much for watching. We'll be back with more small stakes tomorrow, but stick around. Splashing the Futures coming up next. Peace.